So in today's lesson, we are going to look at something new. We are going to look at the daily candlestick confirmation. This is our fourth lesson, right?
Yes, sir.
Yeah, then we're going to look at the daily candlestick confirmation. Then we are going to look at the risk management of the strategy. And on the next lesson, we'll be looking into the top-down analysis, how to combine everything and get into conclusions of the entry you're going to take. So we're going to start with the daily candlestick confirmation, whereby it's like as follows. Let's say we have a downtrend. And at this time we have a downtrend. Let's say we break structure right here, right? And we come to respect this invalidation point right here. So we'll be taking a buy right here at our invalidation point. So the time we're taking a buy, remember we usually take the main trends entries and the counter trend entries. So we can see right here we have very many entries. We have the first entry, we have the second, third, fourth, fifth, sixth, and seventh right here. These are very many entries right here. So what you're going to do, we're going to start. I'm going to show you how to be selective on which entry to take and which entry to not take. So what we are going to do, let's say we're in a higher time frame, let's say the daily time frame. What you're going to do, we are going to mark these points. We are going to mark these points. And after marking these points, what you're going to do, we'll wait for price to reach our target and give us a daily candlestick confirmation. When I'm speaking of a daily candlestick confirmation, I'm talking of any price action, any reversal candlestick that will happen in the daily time frame. But that candlestick should respect our entry, whereby we'll expect that candlestick to appear somewhere here, or maybe somewhere here, or maybe somewhere here. So by doing this, we might find that we are reducing the numbers of entries we are going to take, since we have very many entries right here. So price, at the time we're waiting for price to give us a daily reversal candlestick, price might break these two structures. Price might even break the third structure and come to respect on the fourth structure. And on the fourth structure, price might give us a daily candlestick confirmation. Let's say an engulfing or a doge or a dragonfly, any kind of candlestick reversal in our entry point. And at this time, when you get that candlestick reversal, that's when we are going to start to look for an entry. Remember, when you're talking of a daily candlestick, that means that day has ended in order for that candlestick to close. Remember, like we usually make our decisions after the close of that that candlestick. So when this candlestick closes, that's when we make our decisions. Like it's a reversal candlestick or it's not. Then if it's a reversal candlestick, that means what you're going to do, you'll start look for a re-entry. We are going to start looking for a re-entry. Remember, most of the time, let's say when you have let's say a structure retest. Let's say it's a daily structure. When price comes to our entry, most of the time price usually respects on the first day, right? In the second day, price usually creates a week. Price usually creates a week. So this week, is our target, whereby in this next day, on the next day, remember we'll be trading on the next day after the candlestick confirmation. So in this day, the candlestick will open. Then we are going to look on where price is going to retest with this week, this candle week. So this candle week is our target. This candle week is our target. From in the higher time frames, it will be difficult to spot it, but what you're going to do, we'll drop in lower time frames and try to look at anything that you're going to find around here as a re-entry. We might find an invalidation, or maybe a structure retest, or maybe a break and retest structure. Any kind of structure we know, that's a structure we're going to trade at that point. And after trading that structure, that means we are trading a re-entry. That means we've just taken a re-entry for this sell that will be dropping. And at that point, that means we have reduced our risk by not trading these 3 fake entries. Have you got my point still there before I proceed?
No, please, I don't have any question.
Okay. So this is it's an example of a downtrend. And let's say when you have an uptrend, let's say we have broke structure and now price is dropping. We're trying to look for a re-entry where price will respect to create more highs. We're going to look for a continuation. And at the time we're looking for a continuation, we can see that we have many entries right here. All of these are entries. So what we're going to do, we are going to wait for a daily candlestick confirmation to respect any of these structures. So price may drop and break all these structures only to come to respect this structure right here. And when price comes to respect this structure, price will give us a candle body confirmation, a candlestick confirmation, a reversal candlestick. So on the next day, this day right here, our target will be on the week of this candle body. This week right here, we are going to spot where will this week go to retest. In order to know where the week is going to retest, you'll have to drop to lower time frames and try to look at anything that you know. And when I'm speaking of anything that you know, I'm speaking of any structure we learned. It could be an invalidation, structure retest, any structure we learned. So after taking this entry right here, it will be our re-entry, since the first entry was right here. So we'll take this trade with anticipating to create more highs on the upside. And at this time, let's try to look at some live examples.
Yes.
Yeah, and most of the time we usually use the daily time frame for such confirmations. So let's say, okay, I usually like this example because it gave huge results. This invalidation right here. So price came to respect our invalidation point, and we got a reversal candlestick right here. After getting the reversal candlestick, remember, we just started trading on the next day after the reversal candlestick. So on the next day of the reversal candlestick, we'll be spotting on where this week will come to retest. So we'll drop to a lower time frame to find that entry. Whereby in this lower time frame, we can see that price we had in this time frame, we had the invalidation point as our entry, and we also had the break-in retest structure right here, whereby price dropped and came to respect our break-in retest structure right here. So this was our entry right here. This was our entry. We can say it was our re-entry. So another example we are going to look at it's okay. We can see an example right here when price came to respect our invalidation X. When price came to respect our invalidation X, we had this candlestick right here. This candlestick right here. So this was our confirmation candlestick. Though it made a lot of pips. So what we are supposed to do, we are supposed to drop in lower time frames and try to look where price would possibly retest to create more lows on the downside. So we'll drop to the 4-hour time frame. I mean the 1 hour time frame. And then the 1 hour time frame, we can see that price came to retest on this structure right here. This structure right here. Let me show you some more examples. Let's try to look at this example right here. We had a daily candlestick confirmation, a reversal candlestick right here. So we are supposed to look for a re-entry in lower time frames, whereby we can see price came to retest on this re-entry right here. So this was our entry. Right here. Do you have any questions still there?
No, please, sir.
Okay. So another thing we are going to learn today, it's about how we maintain our risk management.
Okay.
We're going to start with a stop loss, how to place your stop loss and how to place your take profit. So when you talk of stop loss, let's say our entry is right here. Our stop loss should be few pips above our entry, like somewhere here, few pips above our entry.
Okay, sir.
Yeah, and let's say, let me look for another entry. Let's say this is our entry right here. This structure retest. That means our stop loss should be placed few pips above, maybe somewhere here.
Okay, sir.
And also we are also going to look on how to place our take profit. I remember this strategy is based on swing trades rather than scalping.
Okay, okay.
So what I usually do, let's say we have a downtrend, and at this time we have a downtrend. Let's say we made an invalidation right here, and I took this entry right here. So I'll be holding this trade, and at the time I'm holding this trade right here, I'll be expecting price to retest or break any of these structures. When I'm saying any of these structures, I'm talking of entries, sell entries. Sell entries will be my take profit only if price respects those entries. So if price comes to any of these entries and respects, let's say price comes to this entry right here and starts, let's say creates some lows, that means I will close my position. But if price breaks this structure right here and comes to, let's say, break this structure right here, I'll continue holding my position. I will continue holding. And if price comes to break this structure right here, again, that means I'll still hold my position. But if price, let's say, comes to this structure right here and the price tends to break, respect this structure right here, that means I'll close my position and look for a sell trade. That means I may take my profits right here, and at the same point, I may take a sell at the same point. So that's how we usually take our profits and put our stop loss. And
Okay,
also how we usually let's say how we usually control our holdings and let's say our positions. We usually take some particular profits when we get to 50, let's say from 50 pips and above. Let's say I may be holding this position right here from this entry right here. So when price moves, let's say 50 pips, let's say when price moves 50 pips, I will close some positions. After closing some positions, I will move my stop loss to my entry right here. I'll put my stop loss right here. At the same place I placed my entry. And at the same time, I will close some positions. So just in case price reverses and comes to hit my break even, that means I'll have no loss but profit. Remember, I closed some positions in profit when I got to 50 pips. So when price supports my side and continues to respect my entry, let's say price goes to something like 200, 400, 500, 1K to 3K pips, I'll be doing the same thing. I'll be holding while taking some profits, closing some positions. We'll be holding while closing some positions. So that's how we usually manage our trades in the long run.
Okay, sir.
Do you have any questions still there?
No, please, sir.
Okay, so I think you can make some practice. On the next lesson, we'll only deal with top-down analysis. On the top-down analysis, we are going to deal with all the structures we have been talking about. We are going to see how we can combine them and get one thing and get one entry or 2 or 3 entries. So you have to practice a lot to master all these structures because we are going to use all these structures we just learned.
Okay, sir.
Okay, then let me send you this meeting right now.
Okay, sir. Thank you very much, sir.
Okay, you're welcome.